commencer?
Parfait. Alors, mesdames, messieurs, ladies and gentlemen, bonjour tout le monde. Good day, everyone. We are live from la belle province of Quebec with a beautiful sunny day of 21 degrees and copper trading at $4.69 a pound. My name is Mario Jolet. I am the president of MI3 Financial Communication, and on behalf of the MI3 team and our associated sponsors, the Canadian Institute of Mining, Section Amos, Investor Intel, Mineral Resource Asset Analyst Group, Red Cloud Financial Service, and BTV. We welcome you to this video conference, Let's Talk Mining. The title of our conference for today, Copper Rush Surge in BC. I'd like to give our special salutation to our CIM national members joining us on the call today. Thank you for being with us today. And to understand the booming in the copper market and exploration in BC, let's please welcome our four presenters. First, we will have Miss Claudia Tornquist, President and CEO of Kodiak Copper, who had in 2020 a remarkable discovery. Bonjour, Claudia, and welcome.
Bonjour.
Bonjour, thanks for being with us. To be followed by Mr. Leif Nilsson, CEO of Surge Copper, who recently did a 10 million baht deal financing. Bonjour, Leif, and congrats on that baht deal.
Thank you, Mario. Glad to be here.
Yeah, welcome to the show. Thirdly, we will have Mr. Sam Lee, President and CEO of Northisle Copper. Bonjour, Sam.
Bonjour, Marc.
And thank you for being with us today. And to finish, we will have a bit later on the presentation, Mr. Peter Bell, which is President and CEO of Northwest Copper. I'd like to say bonjour to Adrian O'Brien, that's working with Mr. Bell of Northwest Copper. Thank you for being with us on the show. I'd like to introduce our moderator. First, Monsieur Terry Orsland, mining engineer, 40 years of experience, Metal Outlook speaker at the PDLC. MRAG chairman, Terry, thank you for being with us today.
Got it. Thank you.
Okay, thank you, Terry. And also Eric Lemieux. Eric is a former mining analyst, professional geologist, somebody that did a lot of field work, great experience. Bonjour, Eric. Thank you for being with us.
Good afternoon, everybody.
Okay. Also, for the attendees, we invite you to post your question in the chat, and a representative of the company will answer directly in the chat to your question. Usually our format is we get all the company to present first, and then we have a Q&A session. But we will change that for today. After each presentation, Terry, Eric, or myself, if we have some question, we'll ask. And then, because like I've told you before, the Northwest presenter will be with us around 1:20 to 1:30. OK? Vous pouvez poser directement vos questions dans le chat et un représentant de la société vous répondra directement. As we are getting ready to start, we will mute all the participants for a clear audio. And for now, I will leave the mic to Mr. Terry Orsland to present our guest speaker for our intro on copper. Thank you, everyone. Terry?
Thank you, Mario. Thank you for introductions, our speakers, and Christian as well, who has a difficult task today. Actually, much easier task with the copper price as it is. It's an easier speech, but it's a tough speech going forward because we have seen through various organizations the forecast for copper in terms of demand versus the consumption. Nobody talks about the cost curves anymore, interestingly enough. Everybody talks about the gaps between. Christian has a great presentation. I've seen it, and thank you again. Christian, actually, from our business, investment banking, almost 17 years, via Haywood, and as well to Raymond James. He's now president, CEO of Adventus Inc. He did a great Ecuador presentation about a couple of weeks ago. It was a standout crowd. We had standing room only, Mario.
Yeah.
And he also is the director of Surge Copper. There's nothing about Surge Copper in his presentation. He's going to do a clean, independent presentation on copper. And knowing him from the business, it's going to be as good as ever comes through. Christian, the forum is yours. And what we'll do is that we get some questions after the presentation for you. And then we go with the corporate presentation, starting with Claudia. So Christian, the forum is yours. Share the screen, please.
Thank you, Terry, and for believing in my insights, and thank you, Mario, for putting this together. This is a presentation I could spend an hour talking through. It's only 10 slides, but I think it should be insightful, especially with the backdrop of where the copper price is. And it's a culmination of my experience in the business and anecdotes over the years, a thesis that I've developed, and also mentorship from one of my best friends and supporters, Brian Dalton, the founder and CEO of Altius. So the topic today is plus $4 copper per pound, the new normal. We blew through $4 per pound copper just a few months ago. We blew through an all-time high of copper just a few weeks ago of $4.63 a pound. I believe the high has been $4.87 a pound. So is this sustainable to stay at these levels and north of $4 a pound? That's what I really want to focus on in this presentation, and then end on how the copper space, the four companies that are being presented today, fits into the future. So let's talk about metals. In my view, what we're seeing is a transformation of fossil fuel usage to a metals world, and most importantly, fossil fuel transformation to copper. This has been exacerbated by COVID. I don't think anybody thought of it initially, but COVID has been the best excuse for governments to finally launch a green energy, clean climate change path going forward, and I think the train has left the station on that. And the metal I think that will benefit the most is copper. I mean, other metals may do better from a price perspective or a growth and consumption perspective, but copper is currently the third largest metal commodity in the world, and it is something that is material to any major mining company and any portfolio of a investment advisor or fund manager. So it's something you cannot ignore. What does the new clean energy revolution mean for copper? So first off, when you look at moving from a fossil fuels driven car to electric vehicle, you're looking at quadrupling the amount of copper content. Secondly, when you're moving from a coal or natural gas fired power plant that uses about 1.3 tons of copper per facility, that's growing now to 6.8 tons of copper when you're looking at renewable energy such as wind power or solar power. Another way to look at it is just from 2019 to 2030, the expected copper increase required specifically for content in batteries and electric vehicles is 14 times. So not only are we seeing shortages in copper going forward just for normal growth curves, but we're seeing a disruption in technologies and new uses for copper that will add to the magnitude of the shortages going forward. So Wood Mackenzie and a lot of companies like to talk about supply demand and the cost curve, as Terry has said, but I think this is I think you need to look at it from a different perspective. And we need to look at it from an investment phase right now, and how do we get to the how do we supply the demand required over the next 30 years to meet the world's needs. And so yes, Wood Mackenzie is saying that there's supposed to be small surpluses over the next few years in 2021, 2022, but I really think that's irrelevant in what is required over the next 30 years. I took the slide from Glencore's recent quarterly results. I think it's very telling. Glencore is one of the largest traders in the world and produces a lot of fossil fuels and, of course, metals. And what they have tried to show here is that to get to the goal of net zero emissions by 2050, you're clearly seeing that movement from fossil fuels to metals by these charts. You've got oil dropping oil demand dropping significantly, also coal and gas. Note it's not going to zero, so it's going to play an important part in the world. But look at the growth in the metals required going forward. And if you look at the growth of 30 million tons of copper production per annum over the next 30 years, that's equivalent to about one Escondida a year. and there are no new major discoveries happening, or there are very few happening. So that is really a daunting task. When I look at these specific metals, there's sufficient zinc in the world, in my view, to satisfy this demand growth. In the case of nickel and cobalt, there is the potential for substitution based on different chemistries, for example, in batteries. But in the case of copper, it's going to be very difficult to substitute. And there isn't enough identified significant deposits in the world to get even close to this kind of growth. Where we are in the cycle, so 2005 was the start of a super cycle, really driven by Chinese growth, but also the global financial crisis and the money influx that occurred at that time. That was an 8-year cycle that resulted in an investment period for copper and significant new production coming on board. I think we are in that same spot, and we're just starting another 8-year cycle that could be a lot longer. This last 5 to 10 years in the copper space has not been a great period of time for the producers. I mean, it's allowed for new production to come on board, but balance sheets are pretty stretched. If we think about First Quantum, they're in a current stage of leveraging. So it's not like they're building the next copper mine anytime soon. There have been a lot of companies that have put their greenfields projects or brownfield growth on hold, and now are dusting up those studies on those projects. So there's going to be a lag time for new projects to come on from those companies. So Capstone is a great example with their Santo Domingo projects. When you look at the public markets, I think this is a key point for the 4 copper companies presenting today. We've seen a revaluation, a significant revaluation of producers. And a lot of the producers in the copper space right now are trading at around spot copper price levels. In the last 10 years, investors could have made a lot of money buying and selling the producers, which are liquid. And they've never had to look at the juniors as a result. Look at Freeport, which was trading single digits, like $7, $8 a share last year. Now it's $40 a share. Why would you have to play the juniors? Now it's a little bit different in that the developers and explorers, like the 4 companies on this call, are trading an implied $2 to $3 a pound range, where the producers are trading at spot levels. So I think the easy money has been made from the producers, and now investors need to go down market and play these smaller cap companies. And in essence, you're also driving exploration development, which would be the next phase of growth, new projects in the copper space. We also don't see much generalist money flowing in the space yet. This will all come into play over the next 7, 8 years of this cycle that I'm suggesting. Also, M&A is, I think, 6 to 12 months away at least. There are a lot of processes getting started in the copper space for assets that have been held for sale or being kind of beautified over the last 10 years. Now there's a market for those, and examples of that is Trafigura looking to sell their Matsa asset, and KGHM looking to sell some of their international assets. So all these points are really saying that things are starting to move, things are starting to set a stage for growth and in the space, but we're just early days. This is another chart with a lot of data on it. I'll just get to the point here. Between 1950 to today, the population of the world has grown 3 times, and each individual's usage of copper has grown 3 times. So that means 9 times more copper usage. And if you plot that out on an average yearly gain perspective, it comes up to a similar 60 million ton per annum requirement come the end of, come 2050. And that, by the way, is not taking into account the new uses for copper. This is just taking the average demand for things that we all have at home. Structural and cyclical price trends. Many of the next projects that will need to come on board didn't cut it last time. So as a result, they're lower grade, they're in more complex situations from a logistics perspective, infrastructure, country perspective. So that's going to result in probably a longer cycle than the last time. I mentioned the last cycle was 8 years, probably going to be more than that this time. There are also some easy wins if you go back in the last 50 years. So in the 60s, SXEW technology came around and developed previously uneconomical projects. A lot of these oxide copper deposits now have been mined out. There are not that many left. So that means we have to go to more complex projects, block caving, of course, lower grades. And I'm going to talk about the geological inflation that's occurred as well, which is a key driver, which just means projects will require or will be lower grade going forward. And a lot of companies have been dropping their cutoff grades over the last few years, but there's a theoretical point where you can't drop it any further. And a lot of these mines are at that theoretical lowest point in terms of cutoff grades. So this is all going to drive a longer cycle of investment in the copper space, in my view. So this point, I think a lot of you have heard of from people in terms of average copper mine grade. So this is what's happened since 2000. Average copper mine grade, this is both open pit and underground mines. So we're somewhere around 0.5% copper. So if you strip out the higher grade underground mines out of this, you're probably looking at 0.3 to 0.4% copper for the open pit mines. So this all drives this geological inflation and the challenges that the copper space are going to see over the next few years to meet that demand. And then, of course, let's not kid ourselves, it's getting more difficult to develop these mines. And if you look at Red Chris in British Columbia, it was about 50 years from initial discovery to production. Not saying all mines need to be that long, but that's a factor in all this as well. This is another way to look at geological inflation and what's happened over the last 20 years. So the average operating costs, so C3 basis from 2000 to today for the operating copper mines has gone from about $1 to $2 a pound. The green line has shown the incentive price required for new copper mines to be built. It's gone from about $2 a pound to upwards of $4 a pound. What the incentive price means is what price is required to drive a 15% after-tax rate of return. So that also meant over the last 5 to 8 years, when copper traded between $1.75 to in most cases, it was below $3.30 a pound. In that range, that wasn't high enough of a price to incentivize new development of projects. At $4.70 right now, we're at a price where it definitely can incentivize new projects. But all these factors I'm talking about, including geological inflation, has resulted in this incentive price doubling over the last 20 years. The question is, what's going to happen over the next 30 years? And my read-through is that you could see an incentive price of $5 or $6 a pound in, let's say, half the time by the end of this decade. And then the capex intensity, as you can imagine, has gone way up as well. And that is going to continue to trend up for the reasons mentioned. Some knock-on effects will be a lot of the copper production in the world is coming from Chile, Peru, DRC, Zambia. Higher prices, governments will want to have a bigger share of it. Unions will want to have a bigger share of it. You're seeing that in Peru and in particular Chile right now. That's going to drive all of these numbers higher: OPEX, incentive pricing, and CAPEX. So this is all self-fulfilling. This chart is trying to show cycle again and the periods of time when it's an investment part of the cycle. And what this shows is from 2005 to around 2013 in the orange bars, the price of copper was at a level which incentivized new copper mines to be developed. And you saw quite a few of them. Then from the period of 2013 to last year, very few new mines got developed. And now we're in the start of that new investment cycle, which has all those additional challenges than the last cycle had. And I think will be longer, especially since this is not just the traditional growth that we've seen in the past. There are all these new applications for copper that I've talked about. So where the price goes is the question mark. But if you listen to the likes of the CEO of Trafigura and Glencore, which of course are talking their own book, they see copper pricing needing to rise another 50% from where they are today to be able to incentivize new projects, new exploration, new development. And last slide here, I've got some anecdotes that I thought are quite interesting from various knowledgeable people I talked to really wrap up this thesis on copper and how the step change may change our industry. So the world's 5 largest non-fossil fuel commodities are iron ore, coal, copper, gold, and potash in order of revenues. Of course, the major mining companies and oil companies want to grow. In the case of the mining sector, coal is going to wane in importance, as you saw before. So you will see most of the major mining houses, and that's occurring right now, trying to make up their declining coal revenues with copper. So that's a trend that you're going to continue to see. More interestingly, and it's speculation, is if you go back 50 years, a lot of the oil and gas companies globally produce copper and other minerals as well. A lot of the shareholders of these oil and gas companies are demanding investment in clean energy. I could see some of these oil and gas companies re-entering the metals and mining space, and in particular copper, as the investments in renewables may not be able to keep up with their shareholders' demands also to grow. Here's an investment thesis. The world is flush with cash, and cash is looking for assets that can at least preserve value and also have scale and liquidity. And so, theory is you're seeing a lot of investment, of course, in gold as a protectionist asset, but you're seeing a lot of money flow into more speculative things like Dogecoin and other cryptocurrencies. Why couldn't copper be that investment that preserves value but is vital for the cleaner energy world? And I think you're seeing some of that happening over the last few months. A lot of this rise is through speculators, investors, a lot of the rise in the copper price, that is. And I think that will continue to fuel the price gain along with everything else that I've mentioned. I mentioned the last point on what Glencore and Trafigura CEOs have said in terms of what price is required to incentivize growth in the sector. Another point to make is Wood Mac might say, we're in a small surplus this year, next year, but these surpluses are less than 100,000 tons per annum that can easily be wiped away from strikes, acts of God, union issues, etc. But we are one major mine failure away from acute shortage. Let's say Escondida has a rock wall failure. Now all of a sudden we're in deficit for hundreds of thousands of tons of copper, which would result in a very sharp increase in the copper price. I talked about the next point on higher taxes demanded in key copper producing regions, and I talked about supply demand really not being the driver in the short term. It's really about reinvestment. Another point is ESG and mining. We know it's front and center these days. There is a movement to try to tie units of production in the metal space with ESG through blockchain. That's not going to happen in the short term, but if there was, let's say, a premium tied to ESG metal, that would, of course, increase that marginal production level as well. Now, all of that put together leads to why BC copper is so important. First of all, BC is geologically endowed with copper, and there's lots of new mines that are in the midst, several of them which will be discussed by the next 4 speakers. But BC copper has the ability to be the highest ranked ESG copper units in the world. And that is number one, based on the location in relation to Asia, which is the biggest market for copper, so less transportation, of course, and the fact that BC is on the coast. Secondly, BC is primarily hydroelectric power with great infrastructure and know-how. Thirdly, most of the concentrates in BC are some of the highest quality in the world. So no arsenic. This is the type of concentrate everyone's looking to blend the dirty concentrates in South America from. Fourth point is ESG. While there's some specific cases where it's painted BC with a negative brush from a First Nations perspective, the reality is that most of the province, if you have a good social license to operate and you work with the First Nations, they're great partners. And you'll hear that from some of the speakers today. So if you can marry the two together, where the First Nations are an advocate for your project in British Columbia, it doesn't get much better. And the last point is that the Canadian government, through COVID here, has publicly talked about a critical metals platform where Canada is going to supply those critical battery metals for the world, and copper is one of them. So for all those reasons, I say the thesis is definitely there for BC Copper. And I think all these companies will be very, very successful.
Christian, thank you very much.
Very
In
good.
such a short time, you managed to put a hell of a great presentation together. Christian, a couple of questions before we give the mic to Claudia. In the past, by the way, in BC, when Brandas and Highland Valley Copper and Highmont, Bethlehem Copper, when they came about, this is about going back to early 70s, Gibraltar and all, there was a big talk about building a smelter in BC. Actually, you and I haven't rehearsed this question and answer. Okay, it's quite independent. I think the time will come whereby, if our four presenters today and a few other ones as well, I think BC will be quite tempted to be a player in the copper market, given there's not much consumption in British Columbia. However, instead of shipping to the hungry smelters in China and Korea and Southeast Asia, do you foresee the smelters economics in BC making the mines more economic and more tempted for financing? Because that's the next question about financing I'm gonna ask you.
Well, the easy answer to that question is we don't need the smelters to make in British Columbia to make them more economic. If you look at Copper Mountain's first quarter results, for example, at 0.42% copper, their all-in sustaining costs were $1.40 a pound, and they made a boatload of money. All those reasons I just mentioned about why BC is a good place to produce copper, it's very profitable to produce copper down to even 0.2% copper, the lowest cutoff grades in the world for British Columbia. So we don't need the smelting capacity. And frankly, I don't think smelters will be economic in British Columbia because there's a massive amount of investment that's required. And the smelters abroad are very, very hungry for the product and are willing to pay record low TCs, treatment charges, to receive the product these days.
Fair enough. You were right about the underground being the next phase block caving, especially in Ecuador. We've seen in the case of the Sol Gold possibility. We had Tornquist conference call this morning, still delays after it's going to cost $11-12 billion by the time it's in production. The scale is going up in volume, and the cost of capital is capital cost being very enormous. So do you see a room whereby smaller producers, especially in Eastern Canada, let's say, have a room to play with respect to their VMS deposits in this market?
Well, the simple answer, I think, is that VMS deposits are an important asset class, and they can make investors a lot of money and be the important drivers of building major companies, but they're not going to solve that 30 million ton per annum supply gap. You do need that asset class of porphyries in the copper space to fit the gap, and I think all four companies that presented today have those porphyries.
So that comes to the point whereby I got the easy job today. Easy task of asking questions. The capital costs of this project, you're gonna hear today, it shouldn't be no surprise to anyone. It's gonna be, let's say, with $1 billion each, okay? That's the reality of the copper business. I mean, Turquoise Hill, I said, it's a block cave. By the time it's finished, and it's gonna be, in the books, it's gonna be $11, $12 billion. $1 billion each. The market has been doing a great, enthusiastic job providing exploration capital to our speakers today. And there's no problem with that. I think that's a great source, willingness. And today, for instance, we had Filo Copper from Argentina announced a whole stock market put 50% increase in the market cap, $200 million. And which Claudia saw it last year when they did Discovery Hole last year. So the question is, who will finance these projects? I mean, one of the themes you have is that the oil and gas companies, and they've done in the past, Exxon, Atlantic Richfield, they all got into oil in the mining business. Who will finance these projects in the long run?
Well, if you look at BC Copper, and one of the reasons I got involved in Surge, seeing that Adventus is focused on Ecuador, is that the same majors that are looking at Ecuador have their second favorite spot be looking at projects in British Columbia. I believe there's at least 15 majors looking at opportunities in British Columbia, trying to fill their pipeline, either replacing the coal production or replacing or just building a green energy focused company. So I think if you have a good project in the copper space, the money is going to come from many sources. Money is not a hindrance to moving these projects forward.
There we have a small question for Christian. Can I go?
Yes.
Christian, BC could be a very interesting land of opportunity for a company like Tesla that's looking to build a gigafactory.
What?
Yeah, absolutely. To my point on ESG scoring, British Columbia is arguably #1. And these projects that are going to be talked about have great First Nations relationships, hydroelectric power, low deleterious elements, good infrastructure. It would be an ideal spot for Sam, for example, to have his company backed by Tesla. Elon Musk put more money in cryptocurrency. That money could have financed Sam's project into production. So
let's send him a message after the presentation. Terry, to you.
Yeah, this is coming to the point whereby, let's put some perspective on the table here. We have 4 presenters, 4 assets. You've been through the M&A circuit, 35 M&As, $7 billion you raised over the years. What price would you put for the price of copper on the ground for shareholders, investors listening to this program?
Well, I think a lot of the company or all the companies on this call are trading on like single pennies on the dollar, right? And I think that looking at $1 per pound in the ground going forward for projects that can move forward is realistic. If the long-term copper price is going to be $4 or $5 a pound, you can manage paying up to $1 per pound of resource in the ground. So that's a huge re-rate opportunity for all of these companies.
Yeah. The good news is that BC versus Chile versus Peru versus Papua New Guinea versus Central Africa. As Christian, you said yourself very well, we do have regressive policies. It's been going on for the past 12, 14 years. It's now culminating to a point whereby even the best of the best will change policies. Policies should not be mixed with fiscal policies. I mean, more than that, it's permitting, user fees, restrictions with respect to how much water you use, and so on and so forth. So BC, I know that there's a lot of government people listening to this conference today. BC is an exceptional point whereby it's got the infrastructure, it has power, it has the port facilities, it has this, so far it has the mining policies whereby all those mines today can be a reality. And I'm sorry that to say, but we're gonna see bad news coming from South America the rest of the year and policies. That's gonna put a lot of assets into a different category, tier 2, tier 3 category from tier 1 category. So any parting comments with respect to short-term market outlook, Christian, on those equities?
You might see copper, dropping 10, 20 cents here and there, but I think the trend is up. I fully expect copper to be north of $5 a pound, going towards $6 a pound this year. Obviously talking a little bit in my own book, but I think all the points mentioned show this is going to be a long cycle, and there's lots of new projects that need to be built, new discoveries need to be made, and so it's just getting started.
I'm glued in front of the TV thanks to COVID, CNBC, Bloomberg all day. I love it. Freeport is now labeled, as of last week, Freeport has been labeled as a green energy company, not mining company, green energy company. So all of you are in green energy business. Congratulations. Claudia, forum is yours. President and CEO of Kodiak. You've been here at those presentations many times. You've been a great presenter. Give us some more good news.
Thank you for the kind introduction. Thank you, everybody, for listening in. It's a pleasure to be here. I'll give you an overview of Kodiak Copper. As Mario said, we made a discovery last year at our BC Copper Porphyry project, NPD, which was a real game changer and a transformative event for our company. It enabled us to raise a significant sum of money, and we are now drilling and have embarked on the largest ever drill program on the property by a margin to make 2021 an even more exciting year for our shareholders. Please keep in mind, I will be making forward-looking statements, and you can find the relevant guidance on our website. As a start, I would like to say a couple of words about the people behind our company. First and foremost, Chris Taylor, the founder and chairman of Kodiak. Many of you will know Chris from our sister company, Great Bear, which he also founded, which was one of the big discovery successes and major gold discovery in recent years. So many people think of Chris as a gold guy because of Great Bear, but what is interesting to know is that his background as a geologist is actually in copper. Chris started his geologist career with Imperial Metals, exploring for copper all around North America. He knows BC copper porphyries intimately, has drilled them himself. And for Kodiak, it's invaluable to have Chris guide our technical work. So Chris is really a big part of our success. My background, I've been for many years with Rio Tinto. My background is more the financial, commercial, business side. And when I was at Rio Tinto, I also worked on some of their large copper projects. I did some work, for example, for Escondida, largest copper porphyry mine in the world, and also Oyu Tolgoi, a very large copper porphyry mine. John Robbins, at the bottom of this slide, is an advisor and shareholder of the company. Many of you will know John. He's an entrepreneur, mining entrepreneur in Canada, and has a fantastic track record and many successes to his name. John has put together the discovery group, of which Kodiak is part. And this slide shows the members of the discovery group. It's a loose alliance of companies all working together. Some fantastic companies in there, Great Bear, of course, Bluestone Resources, a Lundin company, Fireweed Zinc, and others. And it's for Kodiak, I firmly believe, great fortune to be part of a strong group. It makes us a much stronger company and gives us fantastic access to whether it's technical know-how, capital markets expertise, contacts, and so on. So I feel very fortunate to be part of the discovery group. So that's the sort of corporate background. And now, without much ado, I'll move on to our MPD project, where we made our discovery. And since a picture says more than 1,000 words, I'll I've brought a little video, short video that gives an overview of the project.
Kodiak copper is located in British Columbia's prolific copper belt known as the Quesnel Trough, which runs through the south of the province. Kodiak has caught the market's attention with a new copper gold discovery at its MPD project.
MPD is very accessible. It's a 3 hours drive from Vancouver near the towns of Merritt and Princeton. Infrastructure and accessibility is obviously very important for economic potential and future development. What's great about the MPD project is its location. We are here in southern BC where you can work year-round and in a very established mining area. There are a number of large mines nearby, for example Copper Mountain or also Highland Valley, New Afton. So it's a very established mining area and everything you need for an exploration project is right at our fingertips, which makes our work very cost-effective.
One of the things I noticed when we were reviewing the MPD project initially was the presence of copper oxides over many kilometers on surface. So what it indicated was that we were sitting on top of a major porphyry system, and certainly the right type of rocks that indicated that there could be a major discovery to be made. This project has the potential to host a major copper porphyry discovery. And of course, with the drilling that we've done recently, we've shown that that's the case. Now, on initial review of this project, what was really impressive is that we had over 100 drill holes over 10 kilometers, and all of these holes have copper in them. And when we're looking at the rock, we saw the right types of rocks and the right types of features that indicated we could be sitting on top of a major copper system.
The MPD project was drilled historically since the 60s, so for over 50 years. And most of this historic drilling was very shallow, almost all only down to between 100 and 200 meters. And that is where we saw the opportunity. So we drilled deeper, we drilled down to over 800 meters, and that's where we got our first discovery hole right here at this location. It was a hole that was mineralized top to bottom and had in the middle a very nice high-grade zone. That was the first time that we saw that in this large porphyry system there are higher grade zones present.
This is some of the best looking drill core that has been drilled in this part of British Columbia. Now we're located here, we're in Merritt, and that means that in all the areas around us we have copper mines in both directions. What you typically see in this region is about 1/3 of the grade. The grade that we've drilled here on the copper and the gold side is 3 or 4 times higher than many of the mines in this area. The types of alteration that we see, the potassic feldspar alteration, the silicification, the presence of chalcopyrite, the presence of bornite, these are all indicative features of a strongly mineralized copper center.
We've made a great start and had some fantastic high-grade results early on in our drill program. We have now gained Teck Resources as a major shareholder. So now we have our work cut out. We have a large 10 square kilometer area of historic drilling and have only poked deeper holes into one small corner of it. That means lots more drilling to come and lots more potential for our shareholders to be unlocked. It'll be an exciting time for Kodiak going forward.
Well, this was a quick overview. I'll dive a little bit deeper. You see the map here. As I mentioned in the video, we are in southern BC, very accessible in a mining area between 2 big copper mines and all infrastructure you could ever wish for. So couldn't wish for better infrastructure and accessibility. It's obviously a big factor why we like the project. Chris spoke in the video about the historic drilling. There has been historic drilling on the property since the 60s, all sporadically by different companies at different points in time and on smaller land packages. And the 2 important points to take away is that copper and gold was drilled near surface over a large area. Now it's up to 14 square kilometers that we have shallow drill results with some quite interesting copper and gold intercepts. And very importantly, most of the drilling was very shallow. On average, 100 meters. And yeah, not many holes went further down than 200 meters. That's where we took a different approach and we were successful right off the bat. Last year, we drilled our now famous hole number 4 That was a real game changer for the company. It resulted in our share price jumping from 50 cents to over $3 and changed the game for the company. So what did we drill? You see the result here of hole number 4, our initial high-grade discovery hole. It was an intercept of over half a kilometer of mineralization, nice long intercept, 535 meters of 0.76% copper equivalent. Just to put that into perspective, the neighboring mine, Copper Mountain, which is quite a close geological analog, their reserve grade is 0.24% copper, so about a third of what we drilled here in this drill hole. Very interestingly also, there was a much higher grade zone in the center of this long intercept of, you see it here at the left, 282 meters of 1.16% copper equivalent. So that was, of course, a fantastic start. It enabled us to raise $12.7 million off the back of these results. Teck invested $8 million and became our largest shareholder. They subscribed for 9% of the company. And that was obviously also fantastic to get them in as a partner. They know the area intimately. Their Highland Valley mine is just a couple of kilometers north of us. And it was, of course, a great stamp of approval for our project. Teck is a major copper producer. They're not interested in small projects. The fact that they invested that early, after only 4 holes, in our company also speaks to the potential for size that they see in this project. We have since had more results. This cross-section just summarizes some of the holes from our 2020 campaign. It's the same cross-section we just looked at with hole 4. Hole 4 is here, so in the middle of the span. And keep in mind, we have drilled so far in 2020 only 10 holes. We're still only at the start, lots more to come. What you can see here is that with these holes, we have quite consistently intersected the high-grade zone, copper and gold zone. That's these dark green and dark red areas. And with our initial 10 holes, we have so far seen mineralization over a width of 300 meters and down to 800 meters. That's already quite significant size. Keep in mind how early we are and how few holes we have only drilled to a deeper depth. And so far, we have only tested about 100 meters of strike of the anomaly that underlies this high-grade mineralization, that's related to this high-grade mineralization. That brings me to our plans going forward. You see here a plan map with some drill traces. The pink areas here are a large copper in soil anomaly, copper on surface. The extent of this anomaly is about 1 kilometer in length, 300 meters across. And this copper in soil anomaly is related to the mineralization we drilled. You see here these black lines, that's the 2020 holes, our 10 holes that we drilled last year. And where I'm hovering with my mouse, that's approximately 100 meters. That's the 100 meter of strike that we have so far tested and have results for. So still 90% of this big copper anomaly is open, and we are working our way systematically through it. You see in yellow the drill traces of what we've drilled so far this year, stepped out north and have drilled to the south, and we will be working our way down this anomaly. Our VP Exploration called it slicing the loaf of bread. So we'll test this anomaly further. And then we have many more large targets, which you see here on this slide. Here on the left is the gate zone again. And this pink soil anomaly that I just spoke about is this pink area here. So that's about 1 kilometer. What you can see here is that the magnetic and geophysical anomaly that's underlying is much larger and also extends to another previously drilled area, Man, which we always thought of a separate area. But with these most recent geophysical results, it looks that this is actually all connected. So the overall anomaly is 3 kilometers, very large. So we'll be drilling this for sure this year. We're busy drilling there already. And we then have the Dillard area, which is here at the bottom in the center, which is very much analog to what we have at Gate. Same footprint, geophysical, same copper and soil anomaly on top, promising shallow drill results, but no deeper drilling. So Dillard also very high on our priority list. We'll drill that. We will be adding a second drill rig soon, and the plan is to put that onto Dillard. And then we have additional target areas at Dillard East, and now also in the newly acquired Axe ground further south. So not short of targets. This slide I've just included to sum up where we are. It's the famous Nilsson curve, which I'm sure you're all familiar with. It shows the stages in the life cycle of a mining project where value is created for investors. And I've penciled in this yellow box, which Kodiak has just entered. We made our maiden discovery last year, have drilled 10 years last year, and so far this year, 6 holes. So still very early days, and we have 30,000 meters fully funded, biggest drill program ever on the property planned for this year. So another 40 to 50 holes. And the aim of this year is to move our investors up this value curve with lots more drill results. First results will come out in about a month's time, a bit more. And then the program and the results will accelerate throughout the year as we keep drilling and ramp up the program. So a very steady news flow of drill results to come. It will be a very exciting second half of the year for our shareholders. Last but not least, very briefly, our capital structure. Points to highlight: we are a very tightly held company, 46.9 million shares outstanding. We are fully funded. Our cash position is 14 million. At the moment, that more than funds all the work we have planned for this year, which is, of course, a fantastic situation to be in. For investors, it means the opportunity as of now is in the market for investors who want to participate. Our shareholder structure you see in this pie chart. Management and board own approximately 10% of the company, and tech is our largest shareholders with 8.8%. They've been diluted through warrant exercises since last year. Our share price is at the bottom. You see we had a big jump when we made our initial discovery and have since consolidated around the $1.70 area. The market simply waits for our next set of exploration results. We're a bit in a lull between results, which is arguably a good buying opportunity. And as I said, results will commence flowing in about a month's time, not very much longer to go. Very much looking forward to that. And it should be an exciting year for our company and our shareholders. Thank you.
Thank you, Claudia. That's a great presentation. Again, it shows you why everyone is so interested in following the company and looking for the results. Quick 2 questions before we give the forum to Leif. The geophysics pick up that number 4 hole that you drilled in the high grade zone. Was there a geophysical signature on that?
Yes, it is. It's a magnetic and resistivity low, which is quite different from what has been traditionally the exploration approach in the area, where more magnetic highs were targeted. But we, on our property, have had success in regional magnetic lows. And yeah, obviously, geochemics also pointing in the same direction. That's what led us to drill in this area, and we were successful.
So is mag still governing your drilling points where you're going to be putting the holes through?
It's certainly an important part of our targeting approach. Other geophysics as well. We're looking at conductivity, resistivity, we're looking at chargeability. In fact, we'll do some more IP and chargeability work this year. And then obviously the historic drilling and the geochemistry on surface are also important parts of the puzzle.
Claudia, are there any surface material expression for oxide copper, like at Gate or Diller?
Yes,
to speak of?
if you walk the property, there's lots of oxide copper and lots of the propylitic alteration rocks all over the area. That's what got Chris Taylor interested in the first place. He walked the property and he just saw all the green rocks typical for propylitic alteration over 10 square kilometer footprint all over. That's what led him to the conclusion that he's on top of a large porphyry system where just nobody had ever drilled deep enough to drill into the higher grade porphyry centers.
Eric, quick question for Claudia from you. Eric?
I would, but I think I'd prefer maybe to keep it towards the end because, or in the chat, and I did ask a question in the chat, Claudia. Just, I don't know, Mario, I think time is passing by and I don't know, we've got 3 other presenters, so I don't know.
Go ahead with one question very quickly, and then after we'll have Mr. Leif to.
That's a good question.
Go ahead, Eric. Just one question, please.
Well, Claudia, good presentation. I'm just wondering, the drilling you're doing, is it directional drilling where you're controlling the where the drill is going exactly?
Well, we are diamond drilling and yes, directional, and we just released an update earlier this week. We've so far drilled about just under 4,000 meters. Probably we've gone through the 4,000 meter mark already and are currently on hole number 7. Have 6
Okay, and what is your drilling costs per meter?
It's because we are in a very established mining area with a local drill contractor, it's comparatively low. Everything included, assays, everything, we're just north of $200 per meter.
And it's testament to the British Columbia in terms of the expertise and the cost structure. So kudos to you guys.
Thank you.
Thank you,
If any
Claudia.
further questions, I'll look into the chat module and will certainly answer any of them, or can obviously also be reached, and I'm always available to answer further questions.
Thank you, Claudia. Thank you. Mario, our next speaker.
Yes, please. We'll go with Mr. Leif Nilsson, CEO of Surge Copper. And don't be shy to ask Claudia some question in the chat, please. Thank you very much, everyone.
Leif, form is yours. Where are you?
Yeah, it's right there.
Live unmute. Okay, perfect.
Yeah, sorry about that. My mouse was giving me trouble here. Hold on a sec.
Just while he's doing that, Life, by the way, comes from our business as well, for investment banking for a while, and also technical background. And he's got his own record of doing financings and all. So he's not parachuted into industry. A lot of experience here. Life?
Indeed. Thanks very much. I'm going to try to keep this pretty brief, and the presentation has been truncated. I've got a bunch more slides in the appendix and can jump around if there's questions later on. But of course, I'm going to be making forward-looking statements as well, so would refer you to the full deck on our on our website to look at the disclaimers around that. So Surge is entirely focused in what we call the Huckleberry District by virtue of surrounding the Huckleberry Mine, which is an asset that is owned by Imperial Metals. It's one of their 2 mines that are currently on care and maintenance. Surge's strategy has been very focused on consolidating a big land package that surrounds the Huckleberry Mine. This is an area of BC that is very brownfields in nature, partly by virtue of Huckleberry being there, but also it's a area with extensive forestry activity in it. So excellent mining related infrastructure in terms of a road down to the Huckleberry area. They've brought down grid power there, abundant freshwater supplies, and multiple port options over on the West Coast. On the subsequent slide, I'll take you through the various transactions we've done to build this land package. But as it is today, It's classified under two different projects called UTSA and Berg. We control today quite an advanced resource inventory. So everything shown here is in the measured and indicated categories. So it totals up to about 834 million tons of porphyry copper resources in the M&I categories at grades that range from 0.4 to 0.45. So well in excess of the average operating reserve grade in BC. This is all on a contiguous land package that we have put together, very large in size, about 122,000 hectares. It's an area that has had very little activity in recent years, and a lot of what has been discovered there historically has been it either outcrops, it's sort of huge alteration signatures that are practically visible from space, or in the case of some of the discoveries made down in the UTSA area where there is a bit more cover. Some ground-based geophysics has led the way there. What we want to do, we want to go about this very systematically and bring the exploration data set back up to date. So we just announced yesterday that we will be commissioning or commencing the first ever ZTEM geophysical survey across this entire district in collaboration with our neighbors at Imperial. This is a technique that is relatively modern. It's a proprietary technology developed by Geotech. These sorts of things are never a silver bullet, but this particular technique, it uses very long wavelength EM signals, so it allows you to see quite deep underground. So in sort of porphyry or intrusive cluster environments, particularly where there's some sedimentary cover in the area, it can be a very effective tool for imaging the quote unquote plumbing of these systems, and can be definitely a handy device for future targeting. Claudia didn't make a big deal about it, but it's one of the tools that they've used with considerable success in terms of what they're doing at Kodiak. So when we look at the scale of endowment that we see in the Huckleberry district and the lack of modern tools that have been applied here, we're quite excited for the remaining discovery potential in the area and to get after some new targets later this year. We have been running some drilling this year, so I'll point you to this bar chart here. So the total scale of drilling investments at the UTSA property over the last number of years is around 126,000 meters in terms of what's gone into the deposit areas specifically. About 20,000 of this was done this year. So we've made a fairly significant investment between November and March of this year in terms of the overall drilling into UTSA. We've so far released about 2/3 of the results from that program. Some of the initial or the highlights from those initial results are shown here. These are quite attractive to exceptional copper porphyry results, not just on a BC basis, but I would say globally. I'm plotting them here on a chart. It's a little bit hard to see, but this is basically a compilation on a grade times thickness basis of global copper exploration results. So much of what we're pulling out of the West Seal deposit, it tends to rank in the top quintile, the top decile of global exploration results on a grade and thickness basis. So we still have about 1/3 of this program yet to be released to the market. So definitely looking forward to additional results of this caliber to come. In terms of the people and personnel side of the business, so this is a bit of a tale of a refresh of a company. So Surge, as a public company, has been around for a number of years. It is, like many other copper companies during the downturn, has sort of been in cash conservation mode and keeping the property in good standing and the lights on and what have you. Myself and a couple of colleagues, including Christian, who you heard from at the top, got involved with the company in the tail end of last year. We recapitalized the business with a $6.5 million non-brokered flow-through private placement, which allowed us to kick off that the drill program I just spoke about. A couple individuals have joined the board. As Mario alluded to, I have a background in investment banking, so my career, I started out as an exploration geophysicist, did some consulting in that space, and then spent about 12 years in various investment banking environments, most recently with Macquarie Capital for the last 8 years. So I'm a huge copper bull, big believer in a lot of the macro trends that Christian spoke about at the top. And I think the opportunity present in a lot of what we're seeing in BC is, I think it's just absolutely fantastic. So I was quite keen to come across and take on the CEO role at the beginning of this year at Surge. So just a bit more about our properties. I think this claim map tells a lot of the story of what we're up to. So I mentioned this was brought together through a few different pieces. So Surge as a company for a long time has owned this blue property to the south of the Huckleberry mine. It's called the Utsa property. On it are 3 porphyry resources or deposits called East Seal, West Seal, and Ox. In December, we did a transaction with the gold company St-Pierre Gold to acquire, by way of a 70% option agreement, this black property to the northwest of Huckleberry, which is called Berg. That came with an advanced resource at the Berg deposit proper. And then subsequent to that, we've done some staking in the periphery. So you see some of the blue lines around here. Those are all now ground that's owned 100% by us. In addition, this Burgett target here in the center north is a fairly advanced, it's one of our more advanced exploration targets that we're planning some near-term work on. There was some holes in the claim map that we have done a couple transactions with private vendors to clean that up. So, effectively through a number of deals and staking have built this very sizable, again, 122,000 hectare land package that effectively surrounds Huckleberry on, effectively all sides. To give you a sense of scale, from Berg down to the Seal deposits is about 28 kilometers. There's 5 known porphyry deposits in that belt, including Huckleberry itself. And the scale of endowment that we see there in terms of what's been delineated over the years, including at Huckleberry, is in the sort of 1.5 billion ton range. So, we see this very much as a large porphyry cluster, sizable endowment. You've got a couple other occurrences like Burgett and Whiting Creek that don't yet have resources on them, but strong potential for that. And as I mentioned at the top, huge swaths of this area have not been explored with modern methods. So we're going to rectify that, get in there later this year, and start the process of systematically determining what the remaining potential is. I'd say all of this in a manner is anchored by the dynamics going on around the Huckleberry mine itself. So just to pause briefly and speak about Imperial. As a company, you can see on this map to the right, which shows a bunch of the kind of key copper mines in BC. Imperial owns Huckleberry, Mount Polley over here, and Red Chris. They put Huckleberry and Mount Polley on care and maintenance a number of years ago. It was, I think, a confluence of a number of issues: low copper prices, a lot of debt on their balance sheet. I think it's relatively well known that they had some significant issues at Mount Polley in relation to a tailings incident there. And they had kind of committed to the commissioning of the Red Chris mine. So these mines have sat on care and maintenance at Huckleberry and Mount Polley as that company has worked to clean up its balance sheet. They ultimately sold a controlling interest in their flagship mine at Red Chris to Newcrest Mining, delevering the balance sheet in the process of doing that. And now they're starting the process they've announced earlier this year of looking at restart economics and updated life of mine plans for both Huckleberry and Mount Polley. So Huckleberry, I mean, we would expect and would contend in the current copper price environment that it's going to have pretty compelling restart potential. The big issue there is one of mine life. They put it on care and maintenance in 2016. It was meant to take them all the way to 2021. So call it 4 to 5 years of reserve life. There's going to be maybe small potential to look at extending that, but beyond that, we think potentially logical future for that infrastructure rests with the assets we control. and we're certainly convinced that there is excellent potential to extend the production opportunity in this district for many years beyond that. So just to give you a sense of benchmarking, there's been many comments made by the two prior speakers about grade and how that all kind of comes together in BC. So this chart, everything on the left side of the chart are the operating copper mines in BC. Everything on the right are our deposits. This is about as close as you can get to apples. I'm obviously comparing operating mines against relatively earlier stage development projects. But and the color coding here is metal contribution to copper equivalent grades. So most of these deposits are some combination of copper, gold, molybdenum, and silver. And so what we're sort of contending here is that the projects we're dealing with, the deposits that we have at both UTSA and Berg, have grades which are quite strong in comparison to the operating reserve level that we see throughout BC. A lot of the devil's in the details with these things in terms of strip ratios, recoveries, ultimately the quality of the concentrate products you can produce and what you get paid for on those products. Again, I'd point you to the comparison here down here. The projects that we have at UTSA have very compelling numbers in terms of strip ratio as well as recoveries. I'm just going to point out there is a slight typo here. This is not supposed to be 0. This is supposed to be 70 here, which is the recovery number for gold on East Seal, which is a pretty important piece. So here's what it looks like in the area. You've got the Huckleberry mine here in the midground. In the foreground area here is just a small corner of the UTSA property that hosts our three deposits. So the West Seal deposit, East Seal, and Ox. West Seal is the big one of the three right now. So 167 million tons of the total 224. We see strong potential to add tonnage to this deposit. So I would characterize the history of work that's been done here as being, pretty significant investment program in the 2012 to 2013 timeframe, and then because of declining copper prices, really I think funding dried up, and it was very, very difficult to progress this deposit from a kind of large drilling budget perspective. So there's relatively low-hanging fruit left for us to explore around the West Seal deposit. So what we're doing right now, we've completed the 20,000 meter program here, focused mainly around the West Seal deposit area. We're going to get in there again in the summer with a smaller program, which is meant to complete the job of drilling off the areas around West Seal and between West Seal and East Seal, with the target of updating resources there toward the end of the year. In terms of the Berg deposit, you can also see that in this image. So if you follow this valley up behind Huckleberry, the Berg deposit is situated just adjacent to the rusty colored mountaintop here in the background. So a bit more on the drilling. So a couple kind of busy maps here, but I'll explain them all. So this plan map here over on the right is zoomed in just on the West Seal and East Seal deposit area. So I mentioned the drilling program is all focused in that area. So all the blue indicators are collar locations for the drill holes from this year. There were a few target drilling holes in the periphery of this area, but the vast majority, again, was focused on resource expansion and optimization drilling at West Seal. This section over to the left, it cuts through both of the deposits, so it's looking to the north, and you've got East Seal over here and West Seal on the left. I think it tells a lot of the story of these deposit characteristics and where we see big room for upside. So East Seal, very much the starter pit or starter zone of this project. This magenta colored stuff is 0.75 to 0.85% material in the guts of East Seal. West Seal has plenty of that stuff as well. It tends to sit a bit deeper in the deposit. It comes to surface over a 100 to 200 meter wide zone over a fair fair strike length distance. The long axis kind of goes from the southwest to the northeast. And again, a lot of the real attractive grades in the guts of this thing sit a bit further at depth, and both through historic drilling as well as some current results that I'll show you on the next page, we see very attractive tonnage expansion potential in the lower portions of this pit. So the drilling is focused on kind of delineating some of that. And then we're also putting holes into this area between, which is called the gap zone. We've encountered plenty of near cutoff grade material here in the past, but we've never had enough data to estimate resources here. What our objective is through the current and summer program is going to be to fill in this database so that we can potentially have some flexibility around pit designs that will allow us to basically put everything here into a single volumetric shape. If we can bring this down without having it be classified as waste and therefore increasing the strip ratio, there's excellent potential to add large tonnages of higher grade material over on the eastern flank of West Seal. So two sections here that highlight some of the results. I won't go through them in detail, but the characteristics in the core of West Seal are, I think, well highlighted by this long section. So some exceptional intervals like 830 meters of 0.38% copper equivalent, over a kilometer of 0.42. Numerous smaller intervals at higher grade. You can see the splotches of magenta and orange and red in various areas here. In cross section, so this is parallel to that. This sort of speaks to the characteristics I mentioned of pretty significant strike extension potential at these depths. The big challenge with West Seal has always been about how do you fit a lot of the stuff at depth into a pit shape. So 228, one of the best holes drilled here, a pretty important result for us. It was a vertical hole, about 585 meters of 0.57, bottomed in very strong mineralization at almost 800 meters depth. So this stuff down here is obviously not going to fit into an open pit, but very strong potential for huge volumes of material here, as well as we've seen some continuity of this interval about 100 meters to the north. So quite excited for the balance of results in this area to come through. I'm just going to jump very quickly to Berg. So Berg is a very intriguing and fantastic acquisition for us. Strategically, solidifies our position in the district. It's a large and advanced resource that has had very significant investments, primarily from placer dome and terrain historically. The big resource envelope there is around 610 million tons of 0.4% copper equivalent, roughly. I'm showing here what's called a grade and tonnage sensitivity chart. This is meant to show if you look at the block model as a whole and you count up the blocks that are above a certain grade threshold, it's sort of answering the question, what sort of subsets at different grades do you have? What I'm circling here is around 110 million tons of around 0.6% copper equivalent. So normally in a big open pit, this may not tell you much because you need to mine. If the grade is uniformly distributed around, you have to mine it all, and so the average is what counts. But Berg is definitely not that. You can see in cross section as well as in plan view, grade is controlled by vertical structures. It attenuates away from those structures, and so there's a number of these pods shown in plan view that occur around the deposit. So we see very excellent potential to look at smaller tonnage opportunities here that at materially higher grades than what the average resource is. Almost lastly here, I just want to talk about the summer program that we announced last week. So back to the regional claim map here. All these annotations here are meant to point out the target pipeline that we are starting to develop. So there's a number of precious metal occurrences that have been prospected in the Utsa region in particular. These sorts of precious metal targets can represent on their own economic opportunities for precious metals. So in porphyry intrusive environments, you can get large and very attractive vein style precious metal deposits. I'd point out that the Blackwater gold project is only 100 odd kilometers to the east of here. So BC is very well known for having very attractive gold deposits as well that are typically associated with intrusive heat and fluid sources. So these occurrences themselves could be ore deposit opportunities, or they could be targeting information for finding additional porphyry intrusive centers. And then up here in the Berg area, there's less cover, and there's more, I would say, well-developed and mature porphyry targets themselves. Berg is the key one. This is a coincident copper in soil as well as geophysical anomaly. It's got a small amount of drilling done on it in one corner of this very large target. So we're quite excited to get in there and put some additional holes into it as well. And then as I mentioned, this entire area that you see on this map will have consistent coverage of ZTEM EM geophysical data. So quite excited toward the middle of this summer to get the results of that and begin our targeting exercises coming out of that. So very advanced resources at Berg and the deposits at Utsa, but also a quite compelling exploration pipeline. All told, we expect with the proceeds of the financing announced this week that within 18 months from today, we'll have a very advanced and strong sense of the resource scale and opportunity potential in this area. In closing, so Christian, I think, mentioned a bunch of these thematics, but I just want to reiterate them because I do think it's a key part of the thesis here that all four companies are stand to benefit from. So copper as a whole, in terms of the investment thesis, it's one of the biggest metal markets, as Christian mentioned, sort of number 3 in scale of the total addressable market. This is another display of that data that came out of Glencore's annual results. Basically, there's over the next 30 years, a 2.3% CAGR in that total addressable market, which from a percentage CAGR perspective doesn't sound like much, but it translates into an additional 1 million tons per annum required to deliver that ultimate estimated demand, which again can be thought of as a single Escondida required every year. So huge market potential there. And really what's driving that, I think it's a bunch of trends that we all see in our lives every day. Urbanization in the developing world, infrastructure investment, these are thematics that were in place in the last super cycle and have continued unabated. In addition to that, you have the growth in renewable energy generation. This is something that has taken off in the last 10 years with real fundamentals behind it. You've got the likes of Berkshire Hathaway, Brookfield, my former employer at Macquarie, all are some of the most sophisticated firms in the world making colossal investments in renewable energy generation. And again, as was mentioned earlier, I think in the aftermath of COVID, the multiple trillions we're seeing in government fiscal stimulus, much of that is really being directed in this direction. And then the EV adoption piece, there's been a lot of, I think, skepticism around that piece, but I think we're approaching the inflection point here with adoption of electric vehicles that really relates to the cost to the consumer of owning and operating these versus ICE vehicles. And as a result, I think in the last 6 months, you've seen almost every automotive OEM announce multi-billion-dollar investment programs to start pivoting their product offering to meet this trend. So copper is an amazing way to play a lot of these kind of global mega trends. Speaking about BC in particular, this is a map from McKinsey that looks at water stress in different regions of the world. I've superimposed on that these ovals that show the major porphyry belts in the world. So, BC, southwestern United States, the Andean, Cordillera running from Colombia, Ecuador, Peru, Chile, etc. Central, sort of the Balkans and Central Asia, and then Southeast Asia, including Papua New Guinea. BC, for a variety of reasons, skilled workforce, stability of the fiscal regime, abundant fresh water, grid power, amazing infrastructure, et cetera, profiles very highly amongst these various porphyry belts. And as really highlighted here and mentioned at the top by Christian, this is a huge opportunity for major copper producers to look at decarbonizing their production streams. All the power, or a large majority of the power in BC, is renewable hydro. Infrastructure is at such a level that most existing mines or new projects will have strong potential to be able to run everything off of grid power, and looking at new technologies around material handling and movement. Very, very compelling way to decarbonize the production of copper. And lastly, on the question of porphyries themselves, I think there was a question at the top about VMS deposits, things of that nature. Porphyry deposits are unassailably the main source of copper in the world. So about 2/3 come from porphyry deposits. Almost every major mining company in the world that's in the copper business owns one of these things. So this is the kind of vanilla present, and it will be the, again, the de facto future of meeting this supply growth requirement. And everything I'm mentioning here is in relation to, I think, a bit of a evolution in the paradigm of understanding the geological potential at in the North American or Northwest Cordillera, so it's BC and up into Alaska. A lot of these deposits historically have had the, I think, misguided reputation of being on the small end and low grade, but really over the last 15 plus years, through the development of certain technologies and resulting discoveries, we're seeing huge clusters of high grade deposits being explored up in the Red Chris area. Claudia has talked about their quite compelling discovery down at MDP, and further up in the Cordillera in Alaska, you've got things like Pebble that I think put to rest the notion of small scale in terms of this geological environment.
Leif, quick question. Yeah. The proceeds from the financing yesterday, you had oversubscribed. What was the proceeds for? How did you determine that or disclose that?
Yeah, so basically that, I'll do my screen share here again. Apologies for that.
We'll send it to Sam, yeah.
Yeah, so roughly speaking, the proceeds are focused on what you see here. Everything is characterized as minimum. So I think at West Seal, it'll probably be somewhere between 5,000 and 10,000 meters earmarked for finishing the job of drilling off West Seal in anticipation of a resource update later this year. Similarly at Berg, that deposit is already large. We're not really looking to grow it, although it is open technically at depth and outwards. But it's those high grade pods that we're focused on. So there's going to be an infill style program. They're meant to expand and better delineate those high grade zones. That will be back end weighted this summer because we need to improve some of the access routes into Berg. So this red line here is called it's a Forest Service Road. Canfor are opening up a whole bunch of cut blocks in this area, so we're working with them in the early part of the summer to improve this road, and we'll get into Berg with ATV supported rigs later this summer for that program. The ZTEM, as I mentioned, is kicking off in June, and then really throughout the summer we're going to be field crews are going to be prospecting and soil sampling, trenching, and scout drilling, all of the sort of annotations that you see here on this chart.
We don't want to speculate about Huckleberry. Obviously, it's sitting there. The mill is in good shape. It's a small mill, however. Which one will be faster to permit for you to be in production?
Sorry, can you repeat the question? I didn't follow that.
I said Huckleberry mill is sitting there. There's an M&A possibility there, whatever. It's 20,000 tons per day, which is not a lot, but it's there. With respect to your different ore bodies, which one will be the fastest to get a permit and put into production, do you think?
Yeah, so I'll just point you to a slide here that speaks to that. So we did a PEA in 2016 that looked at exactly that. So the big issue at Huckleberry is one of, I said they have a short reserve life. Tailings capacity is also a challenge there, but their 2 pits that they've mined from are already permitted for tailings disposal. They've in fact used both of them for that. And when they're done with their current reserve plan, they will their main pit will have a much larger excavated volume, and it's permitted for tailings. So this PEA, which is I think proof of concept from 2016, it looked at a smaller subset of our total resources, around 65 million tons, so 30%. And the concept was that would be mined and processed at Huckleberry. So sequencing wise, it shows effectively mining all of East Seal, all of Ox, and then an arbitrarily small portion of West Seal, really constrained by the that tailings capacity at Huckleberry. But very compelling economics. It's obviously low capital because of the use of existing infrastructure. The unit costs are elevated as it was modeled here because it's modeled on the basis of a commercial tolling arrangement. That's debatable whether that's the kind of way these things would ultimately work, but taken together, it drives very high IRR, very respectable NPV at commodity prices, which are quite conservative from where we sit today.
This is in the package, right? In the back, in the appendix?
Yeah, all of these slides are on the presentation and on the website. I've reordered them, that's all.
Okay, thanks very much, Leif. Great. Our next presenter is Sam. Sam Lee, actually from CIBC, we came across a few times, I guess, but lots of financing and M&A over the years. He took it crossed the bridge as well. So there you are. Sam, we heard you before from Red Cloud presentation. I'm looking forward to something new or more. Thank you. Unmute. Okay, perfect.
Well, thanks very much, M3, for having us present today. And I especially want to thank Christian for giving a very good overview of what I believe is going to be the precipice of the new gold and copper bull cycle. And I think, Christian, you've done a very good job of describing the dynamics, certainly on the demand side. Obviously, as a part of this forum, BC Copper, I am probably most interested in the focus around the global supply trend. And what we've seen, and you alluded to very clearly and rightfully, is that we've seen this incredible downward trend in copper grades moving to about, call it the 0.5 to 0.6% copper average globally. BC has always been known for being a unique area because we've got such access to low cost power, clean power infrastructure, all of which were described by Claudia and Leif, which is why we're able to mine these types of deposits. Many deposits have been obviously mined, permitted in BC. And so I think this is a really topical conversation to have today, as we see the global average effectively encapsulating around what we see here in BC. And of course, the fact that we do have this incredible access to infrastructure really does sets us apart. I joined Northisle back in 2020 in October with a mission to build the leading sustainable resource company for the future. As you mentioned, I'm an investment banker with over 20 years experience. I'm a metallurgist by training. So I've seen hundreds of projects throughout the different parts of the cycles, different projects that succeeded and didn't succeed. And simply put, I believe that this is one of the most developable projects, certainly in Canada today, from a copper gold porphyry perspective, and potentially the world. And so I can take you through that thesis soon, but as per my initial remarks, in order to take advantage of the point we are right now in the copper cycle, I believe that it is prudent, and the strategy for Northisle is to develop this project as quickly as we can. I will be making forward-looking statements, so I encourage you to read the following slide for additional notes about the forward-looking nature of the information that we are going to be discussing today. So in terms of the project itself, think of this as a $1 billion project. NPV, it's about 150 million pounds of copper equivalent production for over 22 years. Christian talked about the incentive price around having to be $4 copper price in order to get a 15% return. Well, this project has a 19% return at $3.25 copper. So our incentive price technically is even below $3.25, which I think is remarkable. I do think that, you know, the fact that we are in BC, as I mentioned, really does highlight the fact that we can produce this in a very sustainable and responsible way. We all have access to very cheap and clean power. Obviously, the footprint of the project gets reduced when there is existing infrastructure. And so we really believe that using that as the basis for our project moving forward really underpins our ability to develop this in a sustainable and a very low carbon neutral way. The group of leadership here is the nucleus consists of people that have financed, developed, explored, found world-class deposits. So I'm very confident that we are very well positioned today with the current task ahead of us with the leadership and the nucleus to advance this project very quickly. And then of course, on the exploration side, we have over 33,000 hectares of land that, in my view, is very underdiscovered. We've about 49,000 meters of drilling. So we've just literally just scratched the surface for which we're advancing today with a 10,000 meter drill program. Our corporate snapshot, really the takeaway here is we're growing rapidly. We're about a $55 million market cap company today. We've had a very good, strong growth over the last year. There is appreciation within the market and certainly within the research analysts that this project is developable, and it's of size and of strength to be attractive to not only strategics, but also investors alike. It's a very tightly held shareholder structure. We're majority owned by high net worth institutional insiders. Insiders hold approximately 17% and about 22% on a fully diluted basis. So we're all vested in and aligned with our shareholders. As I mentioned, the team is essential as part of any stage project, and certainly what we believe is that we have the proven mine finders, developers, and financiers in place. So I've worked with Dale Corman, our chairman, for many years. Dale's best known for discovering the Penasquito deposit and bringing that to feasibility study. He sold it to Glamis Gold for $1.2 billion. Obviously, one of Newmont's more prolific mines today. Kevin O'Kane came on just shortly after I did. He was the chief operating officer for SSR, but spent a majority of his career with BHP developing and expanding some of the most formative mines in the world, including Spence, Sierra Colorada, and Mineral Escondida. Interestingly enough, Kevin O'Kane was actually the chief mining engineer for the Island Copper Mine, BHP's Island Copper Mine, which is the mine that sits just adjacent to our mine, to our project rather. And then, of course, Jack McClintock, who was my predecessor, VP Exploration. He's probably best known for discovering Spence deposit, which is a very significant copper copper producing asset in Chile for BHP. So the snapshot simply is we have approximately 5 billion pounds of copper equivalent and indicated, and an additional 2.8 billion in inferred. If you want to look at this as a gold equivalent basis, it's about 9.3 million ounces in indicated and a significant amount in inferred. So this is a 22-year life of mine with about, as I said, 150 million pounds of copper equivalent. We've got extremely low all-in sustaining costs. That's informed by a significant byproduct, as I said, contributed by the gold. Just to put things in context, if you were to put a 100% stream on the gold, so that's 100,000 ounces a year for 22 years, 5% discount rate, $400 ongoing payment, that's a $1.2 billion stream, which is effectively the size of the entire CapEx. So this is a huge gold byproduct in what I would describe as a medium to large size copper project. We are located on the northern part of Vancouver Island, which is a very industrial part of the island. Obviously, the Island Copper Mine, BHP's Island Copper Mine, sits just adjacent to us. And then we, of course, have 100% owned Pemberton Hills target, which is our greenfields exploration project that we're currently drilling on today. So this gives a little bit of a snapshot. I'm going to grab my pen here as to where we're located. So our deposit, PEA, is informed by the Red Dog and Hushamu deposit. We're on the northern tip of Vancouver Island here. BHP's Island Copper Mine, which was a 24-year life of mine production, produced approximately 345 million tons, similar grade, similar style deposit. They were located right on the corner here. They shipped their concentrate to Sumitomo right through the inlet. That port facility still remains. It's still permitted as a port facility, and it's only about 25 kilometers away from our deposit. All of these road networks are obviously in very good condition, most of which is being maintained by the BC government. The remainder is maintained by our partner in land, Western Forest Products, who have the surface rights for the lumber. Our Pemberton Hills project is located right here, only about 10 kilometers away from the BHP pit. And then, of course, Port Hardy is only about 20 kilometers as a crow flies to our project, and only about a 30-minute drive from Island Copper. So this is not a fly-in, fly-out camp. All the infrastructure is there. Port Hardy would be the main center, main hub for our activity, which it was for the Island Copper pit. So the second reason why this project works so beautifully is that it's got an extremely low strip ratio of 0.71 to 1. And that's informed by the Red Dog, which is our smaller, higher grade deposit. It's about 50 million tons. That strip is less than 0.2 to 1. And then, of course, Hushamu, which is our much larger, well understood deposit that informs the rest of the 0.7 to 1. So this is a huge component to the strategy around not only the economics, but also right-sizing the deposit, making sure that our footprint isn't as big as it needs to be. So the economics is in front of you there. Like, I mean, if you look at this as a 22-year mine, copper mine, which, as I said, you should, and the IRR, 9% IRR for 22 years is a good IRR. So as Christian said before, incentive price to get the threshold of a 15% project. A lot of these projects need about a $4 plus copper price. That is absolutely not the case here. This is a $1.1 billion Canadian NPV project after tax, as defined by the PEA, at $3.25 copper. The payback is 3.9 years, so it's effectively within 18 years you're starting to make that return, which is quite achievable. The cash flow for the first 6 years averages about $321 million Canadian, which is significant. And all-in sustaining cost for the first 6 years is approximately 77 cents per pound copper and $2 per pound of copper equivalent. Life of mine is approximately 90 cents per pound Canadian and $2.14 per pound copper equivalent. So very, very low cost mine. And again, informed by the fact that we've got a low strip ratio and great access to cheap power and infrastructure. The sensitivity to this is remarkable. We're obviously at a $4.75 copper price environment. For every $3, for every 25-cent increase in copper prices from $3.25, which is where we pin the PEA on, the increase to NPV is $300 million. We're over $1.50 above where this PEA was done a few months ago. So significant leverage to copper. This is where people start to understand that the incentive price is clearly past the $3.25 level, and we're very comfortable with even the most conservative assumptions being plugged into these numbers. So this is a really interesting chart, because what it does, it talks about not only how we are undervalued, but why we think we're undervalued. So the first thing that this speaks to is The fact that we actually are material, we do have a material amount of resources. We're obviously trading cents on the dollar, and as Christian, his call was about dollar is where we should be, or the entire universe should be trading at. That is absolutely significant, and the fact that we do have over 5 billion pounds of copper equivalent resources makes us material. The second point that I think is really interesting and it informs our strategy moving ahead is if you look at the bottom chart, the price to net asset value, as you de-risk projects, there is a very identifiable re-rating. And so as you see a lot of these names that people are familiar with, as you go down to the left-hand side, these are projects that are more and more and more developed. And as a result, they do achieve that re-rating. We're trading at about 0.11 times our net asset value. For a PEA stage company moving into a PFS, I would argue that is, based on historical precedents, low compared to what the historical precedent average is. But I think we can only control what we can control. And as I mentioned in my opening remarks, what we are going to do is move it through these stage gates as quickly as possible to achieve this re-rating. This is a chart that Leif, it's a variation on a theme what Leif showed here, but the main point simply is we are effectively the average grade of what you would expect a BC mine to look like. This is us pegged against the measured and indicated resource grade for current BC operating mines. I think, again, as I pointed out before, there is this declining trend towards about a 0.4, 0.5% copper equivalent grade for mining projects globally. And that is consistent to what we've been seeing in BC throughout many, many years. The difference is in BC, as I mentioned, we do have that access to very strong infrastructure and power and cheap power, which allows us to process these materials in a way that we usually do in a recoverable and economic fashion. So in terms of initial CapEx and our capital intensity, this is not a small project. This is not a large project. It's kind of right in the middle. And it's the way we look at it, it's a binary outcome, right? Like you're either, the capital intensity is too high in order to move a project forward, or it's not. And we certainly, in my belief, fall underneath the threshold of what a major or an intermediate company would define as that threshold of capital intensity. Obviously, as I said, the significant portion of our CapEx is going to be derived from our processing facility, which is underpinning our belief that we can actually make this a carbon neutral, potentially even net carbon zero mine, given the fact that we do draw on clean and renewable energy. That's the biggest part of our operating costs and our capital costs. On an operating cost basis, the reason why we're so low and within the lowest part of the copper production cost curve is obviously we have that massive gold credit that we do apply to the all-in sustaining costs. But again, we do have access to very, very, very cheap power. And our strip ratio is exceedingly low relative to a number of other projects that are out there. And in terms of, how we approach sustainability, look, I mean, we've set out our PEA. Obviously, the PEA is a PEA that suggests traditional means of mining fleets and technologies. As we progress this project moving forward, what we have charged ourselves in doing is looking at this project as a carbon neutral, net sustainable zero project. That picture of BC's largest wind farm exists right on the northern end of our project, which means that we can actually draw directly from that wind farm, which obviously is a clean and renewable source of power. Absent that, BC obviously derives the remainder of its power from hydroelectric power, which is obviously at 6, 7, 8 cents per kilowatt hour. It's one of the lowest in Canada. So it's something that we definitely are looking into and are setting ourselves up to proxy how we are improving against these sustainability metrics related to carbon emissions, as you see on the bottom end of the slide. So in terms of exploration, as I mentioned, we're going to be doing about 10,000 meters of drilling over the 33,000 hectares of our land. There has been about 400 holes drilled. That informs our resources today. Our drilling is going to be bifurcated into greenfields drilling, which is Pemberton Hills, a massive large lithocap, 3.5 by 1.5 kilometer lithocap, reservoir style type deposit, buried deep copper porphyry system. We've initiated that drilling starting in March. The second part of our exploration program is going to inform our project, and that really is going to focus around our higher grade, low strip asset in Red Dog. And then, of course, our Hushimu deposit, which is much more predictable, much larger in size, and to be able to get to a plus 1 billion ton resource in short order, we believe is entirely achievable. So in conclusion, what we're laser focused on today and over the next 6 to 12 months is to rapidly advancing the North Island project through to pre-feasibility study. The target completion for the PFS is 2022. In addition to that, and in parallel to that, we are going to aggressively accelerate our exploration activities through 2021 via this 10,000 meter program that we've initiated in March. And then, of course, one of the key factors that everyone alluded to here and absolutely spot on is advancing our First Nations and community partnerships in parallel with our project development. So in my mind, what does that look like? Well, it's probably having an agreement with the First Nations within a short period of time. So we all have set the framework for how we develop this project together with direct consultation with the 3 First Nations groups that are involved. And then, of course, taking a disciplined approach to strategic alternatives, including financings and partnerships. There was a question on the call initially who asked about how will these types of projects be financed? Well, there are multiple. If you've got clean concentrate, which is what we have, if you've got extremely attractive a source of renewable power, which is what all of BC has, but you've got a low strip ratio, you've got a massive gold credit component. There are multiple ways to finance projects. We just have to be very judicious and methodical and disciplined on how we approach these alternatives. So hopefully I kept within my 15 minutes. I'm happy to take questions.
Sam, thank you again. It's Terry Orson. Island Copper, BHP, I'm sure it's a big company. They have no legacy issues when they left. I'm sure I got this question many times before. Any legacy issues for you?
Nope, there are no legacy issues. They've essentially reclaimed the pit. They've filled it up. Right now, it's being used as a neutralization pond for acid rock drainage from the ore that's currently sits on the side of the pit. We are currently in discussions with BHP to figure out whether we could use that pit for our tailings. So as you could imagine, for PAG material, any tailings material, subaqueous environments storage is the most ideal storage for tailings. There effectively is a 700 million ton pit that exists there that is currently subaqueous. Obviously it reduces the footprint significantly. If we could use that pit, also reduces our costs in our contemplated studies as well. So that is important from an economic and from an environmental perspective. I think the most interesting part of this also is that the Quitsino, one of the First Nations group, has actually purchased the land for that operation, but for the pit and the foreshore. That group really does want us to see, or to see that pit being repurposed as a potential tailings facility. So it's something that we're working on. It's not the way we see it is actually it's not a liability, it's an asset. We will be obviously updating the market as we progress with those discussions.
The island also has forestry. Can you coexist with the forestry business?
Absolutely. So the surface rights are effectively owned by, or the logging rights rather, are owned by Western Forest Products. So a lot of the access points that we actually are using right now are created by the logging roads that were created by Western Forest Products. Obviously, where there's disruption or there's an area of land that we use and that we will sort of use in perpetuity or for the life of the project, we will need to compensate the forest company appropriately and commensurate to the revenue that's lost. But that obviously is taken into account the overall cost of developing this project. But the rights, the mineral rights are ours, the logging rights are theirs. And the good news is that there's a lot of infrastructure that's been created by not only the forest products industry, but also the mining industry that's really enabled this project to be as attractive as it is today.
Yeah. Thank you very much. Been there, seen it. Yeah, great place to explore and build a mine. Thank you again very much. Our next presenter, Northwest, Peter Lee. Peter is also come to banking side, 30 years in the business, about 13 years of that with Newmont. Where's Peter? Okay.
I'm here.
Bonjour, Peter. Welcome.
Thank you.
Good to see you. And we've been everywhere: Peru, Nunavut, Tanzania, you name it. So you got your mileage, Peter. Forum is yours.
All right. Thank you very much.
Do you have the screen sharing on your side? Yeah.
Sorry, what's that?
I said, do you have your screen sharing on your side to put up your presentation?
I'm about to do it.
Okay, very good. And thank you for being with us, Mr. Bell. Pleasure.
Thank you for having me. So I assume that's up for everybody.
Yeah, we see it.
Okay. So yes, I am the CEO of Northwest Copper. In fact, I'm the new CEO of Northwest Copper. I just joined the business day after the merger closed, the merger between Serengeti Resources and Sun Metals. So I've been in this chair since March 8th. And happy to present the story. So I'll walk through it here. We'll be making some forward-looking statements. In terms of the company, when I describe it to people, I basically always start with this slide, which kind of outlines the reason for the merger and kind of a lot of the what I think makes this opportunity special. So this is the camp of Sun Metals, and sitting beneath this hill here is the flagship deposit of Sun Metals, which is a Stardust deposit, which is a pretty unique creature in being a carbonate replacement deposit, copper, gold, silver deposit with quite high grade. And Sam was talking about grade in British Columbia. This deposit, the discovery hole of the deep part of this was drilled in 2018, and hats off to Sun Metals on the work there. They drilled 100 meters of 5.3% copper equivalent. So a remarkable result. You know, the deposit is not huge. It's you know, definitely on the small end of certainly BC projects and even definitely global projects, obviously. But what is interesting in the kind of reason behind the merger is the proximity to the Kodiak deposit. And the Kodiak deposit sits out in the valley here, immediately adjacent to Stardust. And Kodiak is a more typical BC porphyry, several hundred million tons of a little over 0.4 copper equivalent grade. However, one interesting thing about Kodiak is that it has a high grade portion, a discrete high grade portion that's actually fairly close to the surface. So first of all, you get higher grades that are accessible early in the mine life versus a lot of other projects, but also you're adjacent to this very high grade material from Stardust. So the combination is based on you know, taking the grade from Stardust and the kind of scale from the Kodiak project. Just a couple of other things to note here. One is, you know, this is not the most rugged part of BC. This is a pretty accessible part. In fact, you can drive to this project from Vancouver or wherever you happen to be, and good, decent infrastructure in the region. So our kind of basic investment thesis here is to take the high grade part of Stardust and the higher grade part of Kodiak, build a combined project and build it in a way that has scale such that we can finance and build this ourselves. So try and keep it, you know, sub 500 million kind of capital, and then be in a sense a little bit in control of our own destiny, in that we're trying to build out a big projects and we have a pipeline of projects, but also we don't have to rely on M&A you know, we feel this is something that's doable for us, not just because of the scale of the capital, but also being part of a group that has put mines into production in the past few years. So on the management team, so as was stated, I have been to a lot of places. I was a geologist for about 16 years, spent 10 years on the buy side, ended up managing a mining focused hedge fund based in the UK, and then spent 3 years working for National Bank in mining investment banking. And Mark contacted me about this early in the year, and you know, I was excited because there aren't that many copper development stories, as I'm sure other speakers have pointed out. It's a great time for the copper space. I like the idea of working on a project that felt like we had the option of building it ourselves, and working in BC is a privilege. The rest of our team, Jim Lang is spent about 30 years in BC studying porphyry copper gold deposits. Jim spent a lot of time with Hunter Dickinson Group and also MDRU. Jim is our guy to pull these deposits apart and make the most of them. Lauren McDougall came from Sun Metals, and Ian Neal is the VP Exploration. Ian was also the VP Exploration for Sun Metals and was involved along with the rest of the management team in drilling those spectacular holes in the deep part of Stardust. The rest of the board is a mix from the merger, so the two predecessor companies, and then some technical advisors, including Eric Strom, who's a Newcrest block cave expert, and then some oxygen capital people mostly, so we have the ability to tap into some talent that a smaller company might not otherwise be able to afford, and share it with the other companies in the group. And then just a bit of a plug on Mark O'Day and the team. You know, in terms of trying to be credible and be able to talk about building a project, you know, the Oxygen Group has, now these are all gold mines, but you know, 3 gold mines that are in production came from the Oxygen Group since 2016. Karma and Pure Gold were actually built and financed by Oxygen companies. Karma was sold, Long Canyon was sold, Pure Gold still operated by Pure Gold, the Oxygen company. So some credibility in terms of actually doing this. Where we are in BC, right between Mount Milligan and Kemess, and I think everyone has a pretty good sense of the level of activity in BC right now. We, like everyone else, are highly focused on making sure that we have the best possible relations and partnerships with our First Nations neighbors and community members. And by all accounts, the previous companies, Serengeti and Sun Metals particularly, did an excellent job on these relations, and we are investing in building our team to make sure we keep it that way. So this is where we are, Mount Milligan again here, and Kemess up to the north. You can see there's road access to Kodiak and Stardust. There's road access to Lorraine, which I'll mention, and then East Niv is close to infrastructure, but is a helicopter access project. So we have a pipeline of 3 areas here that we're working on. The first is the Kodiak Stardust, where we're basically working towards a PEA in the early part of 2022 that encompasses the 2 projects and optimizes them. In order to do that, we're doing additional drilling at Kodiak, both regionally, but also importantly, tightening up some of the drilling and drilling a bunch of angle holes to enhance our understanding of the geology and mineralization of the Kodiak Stardust project. East Niv is a brand new target. This is a grassroots project worked up by Serengeti, and we have outcropping copper gold mineralization here, porphyry mineralization that's never had a drill hole in it, and a pretty robust geophysical anomaly. I'll get to that. And then Lorraine is a tech project that Sun Metals acquired 100% of prior to the merger. And Lorraine is something we will probably not drill this year, but it's a very data-rich piece of property that Teck spent a lot of time on. And we want to pull it apart and see if there's something we can do there, particularly potentially something that would combine with the Quinnica Stardust infrastructure that we have planned. So just very simplistically, how this the two projects go together. We mix the high grade from Stardust and the scale from Quinnica, in fact, mostly focused on the high grade part of Quinnica, build a central processing plant close to the two projects, closer to Quinnica, and then operate them together. And by doing that, we're trying to manage our CapEx, as I mentioned before. We want to have enough scale, though, that we're relevant. We don't want to be a tiny mine that is not of interest to anybody. And hopefully, by having a smaller footprint and a decent component underground, that should make our permitting less onerous, although you know, permitting is always a very rigorous process. So that's kind of what we're trying to do here with the two core projects. So Stardust, again, hats off to Sun Metals with this incredible discovery hole of this deep 421 zone, 100 meters of 5.3% copper equivalent. But if you look through these intercepts, there's great continuity here in this down plunge zone. It's you know, going to be open at depth. We have multiple percent copper over tens of meters here, and you know, really, truly remarkable deposit. We will have our initial resource for the entire deposit, the entire Stardust deposit, out in the next week or two. So that will be a key building block for both the project and our ability to describe it to investors. We will not be doing any more exploration on this project this year. I think there are probably more opportunities here to expand this. But for this year, we're taking basically this high-grade component and plugging it into our plan. And then in the future, we'll look at ways to expand the deposit. Because obviously, you don't need many more tons of this kind of grade to materially impact a project. If we go to Quinnica, again, if you look at this cross-section through the copper block model, we can see the outline of all of the mineralization, and then we can see this higher grade portion of it. And the high grade, again, sits closer to the surface, and in fact comes to the subcropping surface here in this conceptual pit. All of this, you know, what's done open pit, what's done underground is all conceptual. These are not, you know, in stone in any way. We will be doing an evaluation after our drilling and optimizing what the best combination of underground and open pit are. But what you can see is that if you were to do this open pit, you end up scheduling high grade material into your mine plan very early in the mine life. So it's got a really nice, especially front end loaded cash flow profile, which is, you know, not that common in a lot of copper projects, certainly ones that I've looked at before. So if we look at these intercepts, hundreds of meters here versus tens of meters at Stardust, but obviously very robust grades, you know, well over 1% through these highlighted intercepts. Just a quick update on metallurgy. We just did some metallurgical test work. We put it a few weeks ago on Stardust, the first metallurgy from that, and we had exceptionally high copper recoveries and gold recoveries. Not that surprising, I suppose, in some ways. Coarse grain sulfides, pretty simple mineralogy, and you know, just the overall grade. There's not a whole lot else there except for really chalcopyrite. And simple flow sheet. Quinnica has had a lot of work done on it, and it appears that the two are quite metallurgically similar. We haven't done work putting the two together. That's something we'll need to do, but for now they seem similar enough in what the metallurgists have outlined for a conceptual flow sheet that that it doesn't seem to be problematic to put them together. So that's our plan. And then popping up to East Niv, so we're up in the north over by Kemess now, and this is a project, a grassroots project that Serengeti put together, and this is the earliest stage thing in our pipeline. We have outcropping mineralization here that I mentioned before, 0.35 copper, 0.3 grams per ton gold. So kind of typical British Columbia porphyry copper gold type grades, and a big chargeability anomaly and magnetic anomaly without ever having a drill hole put into it. So pretty interesting exploration target. We'll be drilling it from early July. Then just for scale and in plan view, this is the geophysical signature of East Niv. And you can see the kind of classic donut shaped geophysical response from the IP chargeability and the magnetic highs, and then the surface geochemistry shown here. So, you know, a kind of a textbook looking porphyry copper signature with impressive grades at surface. So really interesting, exciting target that we'll be going after right away. And just for those who don't ever look at these kinds of deposits, we just have red Chris here for roughly the same scale. Lorraine, again, was a Teck project for many years. Teck had not done any work on it for, I think, over 12 years. This is a situation where this is a kind of data-rich environment. A lot of work has been done in the past. You know, it may not have been big enough for Teck from a standalone deposit mine point of view, but we certainly want to squeeze as much as we can out of it and hope to be able to take advantage of the high grade that exists here and the what's known here, and come up with something that we could potentially take down to the Quinnica Stardust project and especially extend the mine life there. So again, some decent results there historically. We won't be drilling there this year. It's more of a putting the pieces together with the likes of Jim Lang and our team, and then probably drilling in 2022. And then just on our catalysts for the year, so we put out the metallurgy, we obviously completed the merger. I mentioned the resource coming out in the next week or two, and we are about to start drilling at Quinnica. We'll do that exciting East Niv drilling in July, and then spend some time in the field at Lorraine, again, probably not drilling. And then the updated resource at Quinnica, which really provides us with a resource that's tight enough for our combined PEA study, where we really want to optimize how to schedule these things and how to come up with a really robust project with, you know, a material production and capital that we can manage ourselves. So that will be the kind of key catalyst in the early part of 2022. Just on share ownership, lots of insider ownership, some Teck ownership from that Lorraine, and also from their initial investment in Sun Metals. And then not a lot of institutions and pretty chunky retail piece. So that's really the Sun Metals short story from someone who's had the job for 2 months. So I'm happy to take any questions.
Thank you, Mr. Bell. Merci. Eric, do you have any question?
Well, sure. Hi, Peter. Thank you very much for the presentation. I guess it is confusing a little bit because it's Sun Metals that merged with Sargenti. I think Mark Adia summed it the best when saying that it's the sum of two makes greater than, or the sum of 1 + 1 makes greater than 2. And my line of thinking over here is, could you just repeat again the size of the land package you have?
I didn't say it, and I don't have it to hand. So,
if
so
I'm
you've
not
asked the
mistaken,
first question that I didn't answer you.
Okay, but if I'm not mistaken, I mean you're probably over 30,000 hectares, and I think something that I highlighted with the other 3 presenters, where
yep,
I think all of you guys got district scale footprints. And I think that's most interesting. I think it's Pierre Lesson that always said that, you know, land is everything, and that gives you optionality at different levels. And I did ask a question to Sam in the chat where, you know, I found it interesting that he's going for a pre-feasibility study, but at the same time, they're going to be drilling some targets. And I think in this sort of market, it's always good to have the potential to explore. So something I did note that for the Sundust deposit, you weren't planning any more drilling. And I'm just wondering if that might not be I shouldn't say a mistake, but I'm just wondering if you want to create some excitement, is there maybe some ways of doing some deeper down exploration just to show that maybe there is some great upside and have the market excited for certain stuff again?
Yeah, it's a great question, and I used to work for Pierre when he was at Newmont, so I've been lectured by him on all these topics. And yes, we do have a big land package, and we have a whole pipeline of projects and a lot of optionality built around that. And certainly Lorraine is a very big project. East Niv, we've expanded the project there a little bit, and then Quinnica Stardust, also substantial land package. And certainly Dave Moore, who was the CEO of Serengeti and is still on our board, is a big proponent of building big land packages. To address your question specifically about Stardust, I don't mean to imply that we would never test for more high grade at Stardust. We certainly would like to, and we certainly will. And we, but what we're trying to focus on this year is, the Sun Metals, chased those targets and really did a good job of unraveling the geology. And, I think that our view is that we need to spend some time thinking about that geology a little bit before we put a lot of money at risk in drilling those targets in the near term. And the holes have become deeper, they're more expensive. For a company of our stage and size, those are risky bets essentially. And my preference is to attack expanding Stardust in 2022, or at some point where we have a kind of a bigger platform to work from, to manage that kind of discovery risk.
I understand. In terms of the stage and size, something I also want to highlight is that all 4 companies, you're under the 100 million market cap. And to me, that just shows that on the exploration development side of stuff, there's still some great upside in terms of each one of your share prices. So I think that's something that listeners should take note. I was just maybe changing gears, wondering in terms of the BC government. I know there's talk about requiring companies to have post bigger bonds in terms of the cleanup. I'm just wondering how you guys feel about that in terms of being able to say that maybe we'll have to put 100% of the monies to clean up future operations. Because I guess in terms of greening of the economy, I think it's something that we have to take into account. But my comment there is that, I think the mining industry has done, great strides in improving its record and improving its practices of cleaning up after. But I'm just wondering, how do you feel in terms of the BC government being proactive and being pro-mining? Could you give us some thoughts on that, Peter?
Well, I think that the BC government has been more pro-mining maybe than people expected they would be when they were elected.
That's the NDP government, right?
Yeah, exactly. In terms of so that has actually been helpful in some sense. In terms of the bonds, obviously, we're the least advanced, or we're behind certainly some of the other speakers here. But I think what we need to do here in BC is, as a jurisdiction starts to or continues to have a very rigorous permitting process and regimen, that needs to be something that needs to be used both in a positive way and mitigate whatever difficulties come from that. So in other words, I speak to lots of investors, I'm sure everyone else does, and lots of now European investors, and particularly the European investors, but everyone else too, asks a lot of questions about, where does our power come from? What's the permit like? What are your relations with First Nations? What are they're all the as people bundle them, ESG questions that come along. And I think that, to the extent that we have a very rigorous, strong permitting regime, that needs to be something that we need to both accommodate, but also kind of advertise a little bit to our investors so that people feel very comfortable about putting money into mining. And I think then on the mining side, on the mining company side, I think that mining, having worked all over the world, mining is actually a business that is very used to dealing with situations in every kind of political jurisdiction and every kind of environmental setup and so on. And we continue to not do a great job of publicizing our accomplishments and our, the incredible job I think that the business as a whole does all over the world in, helping communities, sharing wealth with communities, providing infrastructure to, places that don't otherwise have it. And we need to, this is a very roundabout answer to your question, but, we need to advertise our credentials and make sure everyone's aware of the good things that we do.
Well, I appreciate it because it was a very good answer and it touched on several aspects that I think are key. And I think, Mario, I'm going to leave it at that in terms of the questions because my phone is ringing over here. So
Okay,
it's been 4 great presentations. Actually, I should say 5, and I appreciate it. So I would like just to thank you gentlemen and lady to have presented what's going on in BC. And I think for the copper situation, I find it most interesting. So Mario, I'm going to leave you the floor.
Yeah, thank you very much, Eric. Merci. It's 14:22. I guess we are going to close it. It was very interesting. But I would like, if we can, revisit in 4 months from here to have an update on the situation. First and foremost, there's a contact information for people still on. I know we've been asked for the replay. We will have it. Give us an hour or 2. Takes time to compress. I want to thank our presenter, Claudia Tornquist, President and CEO, Kodiak Copper. Thank you very much. Presently trading at 184. Claudia, the chart is looking good. It was a nice corridor on the chart. And now we're just waiting for some drill result to bring it up. Secondly, Leif Nilsson, thank you very much for great presentation. Symbol on the surge, SURG. Chart still looking very good. Stock pop and over daily moving average, 50 days, 200 days. Very good, strong. Thank you for your presence. Thirdly, Sam Lee from Northisle. Thank you for your presence. NCX as the symbol, trading around 30 cents, 176,000 volume. Keep talking, Sam. You're getting some volume there, merci. And finally, Mr. Bell, thank you for making it up. I know you were busy with Mines and Money, but thank you. And we arrange ourselves to be on time with you. Thank you very much. Northwest NWST. Just like to remind you, when Serengeti, Mr. Moore, when he got listed, it's a stock that went from 10 cents to 4.75 at the time, at the previous time, like many years ago. So right now, Northwest is 80 cents and looking good on the chart. So I'd like to say thank you very much to all of you, to our sponsors, Robert Duty, CIM, Investor Intel, Red Cloud, BTV, Terry, Eric, merci beaucoup, thank you very much. And to all of you, to the MI3 teams, support in the back, Luke, our main technical guy in the back. Thank you very much for being with us. Merci beaucoup. If you want to replay, don't forget to ask us. I will be gladly send it to you. Thank you very much.
All the replays in one package? Oh, everything in one package or separately?
Depending on what they like. If they